Namaste, investors. We at SmartSync believe that the best way to improve one's own learning curve is to study experiences of stalwart investors who have huge experience in the market. And that's why we started this initiative called Investing Karma, wherein we invite stalwart investors to share their learnings and their journey. In this month's Investing Karma session, we invited Mr. Aveek Mitra ji, who has more than 3 decades of experience in equity market. He is also the founder and CEO of Aveek Equity, which is a SEBI registered equity and portfolio advisory firm. In this video, he shared his experience and his journey of the past 3 decades and how he has gracefully excelled in equity markets. I hope you will like this session. Thank you.
Hello everyone, I am Ankit Kanodia, founder of SmartSync Services, a SEBI registered investment advisory firm. Welcome to the 20th episode of Mission Smile Investing Karwa. For those who are joining or watching for the first time, Mission Smile stands for Making New Stock Market Investors Learn It Through Engaging Research. Investing Karwa is an initiative where we call veterans from the industry and learn from their rich experience in the stock market. Speaking of veterans, we have one with us today on this 20th episode of Mission Smile Investing Karwa, Mr. Aveek Mitra. Mr. Aveek is a SEBI registered investment advisor and an NISM certified research analyst. Aveek has been an investor in the Indian market for the last 27 years. He also possesses valuable corporate experience of about 23 years, having worked in L&T, Usha Martin, wherein he was DGM, and in 2 mid-sized IT infrastructure and data services companies, where he served as group CEO for several years. Now, very few people know that Aveek Da, sir, it's fine if I call you Da.
Yeah, so everything's fine.
So Aveek Da was the first CEO of Dakshina Foundation, the foundation which was started by famous investor Mohnish Pabrai to provide high quality IIT coaching for free to underprivileged students in India. Aveek Da was the first CEO and he helped Dakshina in the early days. So that is about Aveek Da in brief. Now I'll stop here and let us get it directly from the horse's mouth. Thank you, Aveek Da, for agreeing to do this. I also feel proud to share that apart from investing, we have another thing in common. I was born and brought up in Bengal, and you are a Bengali. So, Kemonacho Dada, let's start the session with an opening remark from your side.
Yeah, I'm bhalo achi. Tumi bhalo to?
Amio bhali. Bhalo achi.
Yeah. So good morning, everyone, and nice to know about this initiative, Ankit. Unfortunately I didn't know about it till say you reached me a few days back. So and thanks everybody for joining. So whatever little I know, I will share with all of you. And about me, I think briefly what Ankit has told is perfectly in order, because I started my career in L&T and stayed there for long years. I was initially had no plan of becoming a full-time investor. Then I was in Usha Martin, and then I went to Singapore and joined a startup as a mid-sized company. I built that up because that was basically a startup. It's a small startup. It started when I joined, it was having a $2 million or $3 million of revenue. And when I left, and actually we sold off that company and came back to India. Though I'm based out of Singapore, but most of the time I spent in Bangladesh and Philippines, because those are the 2 countries where we had business. In between, I came to India for 1 year, got an opportunity to work with the Dakshina Foundation to set it up, because I liked that particular opportunity to do something in India. And I also have association with other NGOs over the period of time. And since 2013, since the time I am back in India after 12 years of staying abroad, so I became a full-time investor initially for managing my own money. But later I thought that to make it more structured, I just took a SEBI advisory license and doing advisory. But as you have noticed that we don't really do much of a promotion, or not anywhere promoting or advertising ourselves. So whosoever comes, we are ready to help them. But I have clearly not gone to anybody to ask for money, because I really wanted to make myself disciplined to for thus just to my investments make disciplined. I wanted to get this license, not to make it a very big affair, but yes, over a period of time, it has grown reasonably bigger without really going into the market. So I know that people look for good opportunities, or say people who believe me, because I actually managing money for my friends and other fools for quite some time now. So they have actually helped me in growing. Thanks to them. Yeah, tell me.
Thank you so much, sir. So, Dada, we first want to start with the very beginning. How did you come to investing? So you said that you have close to 3 decades of experience in the investing.
Yeah.
Tell us the very first day, about the very first day when you thought that investing is something which interested you.
Oh, it is not something like that. There was a very first day, it suddenly dawned in my mind that I have to become an investor or something like that. Being born in a Kolkata and in an average middle class Bengali family, you know that. So we were miles and miles away from what is investments, and nobody believed that it is a very honorable work to do or honorable area to get into, right? So but all said and done, from the beginning I had an interest of making a little bit of money. So and I have not been able to figure out what else I can do, because when I joined Larsen and Toubro after doing all my MBA and physics and everything, my salary was what, 3,000 rupees, a princely sum of 3,000 rupees. So and then I got married, I think, after a few years. So I didn't have much money basically. 2096, I started investing simply because my father has sold some property somewhere, and I told him that, okay, the best way to invest into equities and things like that. And before that, I did a little bit of venture. Actually, you can say that in 94, 95, but that was actually by coaxing and cajoling of somebody else, and that money I completely lost. So by 96, I knew one thing, that if I have to invest, I have to invest on my own. So I don't trust anybody. Okay, so when I started, that was the money which I actually invested, but again I took advice of somebody, because I was not very much sure about, and that was a small sum of money basically at that. I don't know whether it is called small sum. It was about 3 lakh rupees or something like that. So that came sometime in the year 97. I started basically, sorry, I think I am making a timeline mistake. I started with some 5-6 thousand rupees in the beginning, and started dabbling with buying this, buying that, 10 shares of this, 20 shares of that, and that kind of things. I'm sorry. So that kind of thing I was doing, but it never really went anywhere. But anyway, soon my father had sold some properties, and we got some money, and that I invested. And interesting, that money got halved basically within 7-8 months time. So I got more and more convinced that I have to learn it some way or the other. That point of time, as luck would have it, basically, because it was not nothing planned. I had only plan of making money without any idea of how to make it, okay, out of stock market. So then I got a friend actually who was with me when uh, and he actually was based in Bangkok, and that time I was in Usha Martin and went to Bangkok for I was posted in Bangkok for few years, and that time that guy was I have found that he's the first person I have seen that who is having this Warren Buffett's letters, uh, what is called this photocopies and things like that, because at that time those books and all were not available. That person his name was Deepak Sen, and he was CEO of CFO of ISB Industries on a later time. That point of time, he was working in Usha Martin, and that guy was based out of Bangkok. And when I was also posted in Bangkok, that was my first exposure to investments in a theoretical, proper, structured manner. And somehow I have been able to recover that father's money by 2000. And 2001, I went to Singapore and started earning a little bit more money. And my investment philosophy initially was basically like a value investor, whatever was there in the Warren Buffett's books. I used to buy value. And then I found that value is never getting unlocked. Everybody, every stock is going up here and there, but my stocks are not going up. But again, I have read some other quotes of Warren Buffett that unless you can see your portfolio value erodes by 50%, you are not an investor. So I thought that, okay, portfolio value going down by 50% must be a great thing. So I must be a good investor by not generating return. That so 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 this kind of strange ideas came to my mind just to prove myself that I am not a fool. But but gradually I have then in and those are the period actually I was in the learning phase. But I think the most influential book after more than Warren Buffett, I think what affected me was Peter Lynch's books, One Up on Wall Street. I think before reading anything else, I think I read very tougher book initially than the easier book, and also discussed about stocks with friends and all whosoever was interested, and started to tell them that I know this investment, that investment, so you can invest here, there, but nothing has properly worked. Anyway, this period actually is 96 to 2000. You can say that 97, 19, 99, 2000. I'm working and doing this part-time dabbling of these things. When I left L&T, I got some money because I got the L&T that this what is called that PF and all those stuffs actually you get back, because when you say that okay, you're not living, you are living out of India, you are not working in India, so you get back all this money. So that was the time I got a good sum of money after working for so many years. So that money I have invested to proper, and that was a pharmaceutical company, that was Sun Pharma, where I invested. So since I have actually exited that company, I hold that company for long 16 years. So I sold it off in 2016. But I will come later that how I was able to hold it, because it is not that I was having a plan of holding it. By chance, I was holding basically the stock. But anyway, so from 2003, 4, when that market was really down after this initial fall of market, after the UPA government came to power and India government suddenly lost. So that gave me the opportunity of really investing in a manner which whatever I learned properly has put into use. But the thing is that by that time I have learned one thing: what all are the mistakes one can make, right? So when you are doing mistakes for 6-7 years continuously, at least you know that what are the mistakes which we can make. One mistake was that looking into very small companies, looking into low P stocks, looking into kind of what is called value and things like that. So which comes very rarely, but comes very rarely for good companies. Okay, for bad companies, it can come and it can stay there and it can go worse. Okay, so that particular kind of things, and many companies I invested at that point of time probably doesn't exist today, because I don't think those are existing. And I can show you properly a set of things when I go back to Calcutta sometime, that some old papers which are still lying there as a non-dematerialized kagaj basically. So, so some Willard India, I can even remember today that some Willard India, Shiv Money Drilling. So I don't know whether those names you have ever heard, because I think it's vinyl chemical. So anyway, so for 2004, I have got a reasonable sum of money over a period of time, which I've earned and put into the market. That has given a phenomenal return till 2000, 2018, 2008. And then again, 2008, actually, that is a year when I came back after selling this Philippines business. And I had a stake basically. So I came back to India for about a year to set up this. And I thought that I won't continue my operation out there. But then the operation was confined only to Bangladesh at that point of time, operating in Singapore. But that business actually needed me also. So I went back again in 2009, and till 2013 I was there. And when the Bangladesh business is sold, so entire business is sold. So I came back to India lock, stock and barrel, because my wife was always in government. So she was unable to join me. So I was staying most of the time alone and traveling between Singapore, Bangladesh, Philippines, India, US, because US main owners were there. So I was traveling all around for many, many years. In between this investment exercise was on 2008. whatever I earned, I think I lost 50% in some 3-4 months or 6 months time, but that was recovered. So I was pretty sure about by that time that the bad times won't last. But only thing that point of time I have been able to better my investment portfolios basically when with that fall. So this and that from 2013, when I came back to India, I became a full-time investor. So you can say that I am investing it. It's a very nice to hear that I'm investing for 27, 28 years or whatever. But serious full-time investments, which I'm doing since 2013, and managing money for absolutely unknown people since 2016. So since the time you're managing money for others. So that is how my investment journey has gone. I'm still learning. I don't think I have mastered this area, and I want to put one point very clearly in the beginning, that I see myself as a portfolio manager, as a manager of money whose responsibility as a trustee of investors is to generate return rather than getting fixated to any philosophy and without doing stupid stuff. So my primary philosophy starts with investor at heart, because that actually gives me that, okay, if I say that, oh, I have invested in a fantastic company, didn't generate any return and fall for 2%, 20%, then I think that investor who has put trust in me for generating return will really understand it. And I think it is a kind of intellectual dishonesty on my part to try to make him understand that, okay, these are the fantastic companies I have invested. So you are a stupid fool. You are not understanding that how great investor I am, though your investment did not generate any return. So that kind of argument to me is just not done. So that is what I am. So that's it. That's it. So from that perspective, you can say that I'm all type of investor. Whatever works, I look into it without trying to do many stupid stuff. That's it. And whatever I call stupid stuff is basically as per my own definition. So I'm not saying anybody else is doing that. Please note that. So hope it
Wonderful,
gives an
fascinating.
overview.
Yes, yes. So, sir, that's fascinating to hear about you. So, before I go into investing and investing related question, one more aspect which I just learned, which when you were speaking, is that you worked for a lot of years. While working also you were doing investing, and then after a long time, you, maybe it has to do with your own personal experience as well, but you started full-time investing when you had at least 10, 15 years or maybe even more years of some experience in the market, right? And
Yes.
now, specifically after COVID, we are hearing so many stories of so many so many people becoming full-time investors. Of
Yes.
course, there is no right or wrong in anything, but as per your understanding, your experience, what would be your advice to any newcomer who is, say, somewhere around 21, 22 and has done good education and is probably looking for a job in a good company as well? And he's exploring whether to go full-time investing or to continue job. What would be your advice?
Okay, so the advice can be given from many aspects. Okay, so I don't know which aspect will be taken rightly by investors and sorry, the potential investors, full-time investors. So please understand that I'm not a reporter of all wisdom. I am just giving my own views. Okay, so and my first point is that very philosophical level, right? So investing is a tertiary activity. So it is not, you are not really adding any real value to the economy directly, right? So if you are, when I was joined, I was working on an L&T, building bridges, working on projects, building, say, a steel plant, or I was into the project division who was looking into building steel plants, cement plants, paper plants, and things like that. So that gives a different type of satisfaction. When I joined and built up companies in different countries, in different cultures, in different setups, that was a different kind of exposures. Full-time investment, I came at what age? I came at the age of 45, I think, right? So, point is that before that, For me as a personality, full-time investment would have been very boring, because the thing is that I would have loved to really move around, move, see places, see people. This is basically a work where you have to sit in home, analyze things, which I really love, but that does not mean I would have loved it full-time when I was younger. So that part you need to understand yourself, that whether your personality suits it. And if you are talking about the money part, which money part last 4 years looks very, very easy. Okay, that easy part may not sustain for a very long time. Stock market gives years of underperformance, years of struggle and trouble. But whatever we say about India is, I also believe, like anybody else, and unquestionably and unarguably believe that this decade belongs to India, or maybe a more than a decade belongs to India, in spite of all the challenges which may be having, and whatever we have achieved and non-achieved over the years, and all, with our all these moles and warts, we will somehow do much better for next 10 years, because ultimately our economy will, all said and done, will go from 4.5 trillion to 9 trillion to it may take 10 years, it may take 7 years, it doesn't matter, because ultimate, but the thing is that wealth will grow, and per capita income, when processed $2,500, it gives a different kind of consumer economy's birth. So that part is there. So the opportunity will be there. But what all I'm trying to say is that after all this verbose dialogue is that basically you need to understand whether it meets your psychology. If you are coming out of greed, that ask yourself very clearly, that you are asking, think that it is the easiest way to make money. It is not. That much I can tell you from my experience. My experience is my experience, right? So it may not be your experience. And second part is that it is sometimes emotionally draining. When you manage other people's money, and if you find that you are not generating return for people who have trusted you for generating return for their hard-earned money, then it is challenging. And I am assuming that you are not managing your own money, because I was managing my own money for 3-4 years, but I just started making this because I was getting a bit lazy. As I told you, I found it a bit boring to always study and things like that. So just to channelize that. So if you are not trying to manage your own money, becoming full-time investor, that is one thing. If you are managing other people's money, becoming full-time investor, it's another thing. So it all depends. What else I can add? I don't know.
No, that was very helpful. So now moving on to investing and investing related questions. So my first simple question to you would be, uh, if I have to ask you to define your investing philosophy today, after last 30 years of experience in the market, just define it in 1 or 2 sentences. Just be as brief as possible. What would you say about yourself as an investor? What kind of investor you are?
So I am an investor who try to do as less mistake as possible. That's it. And I don't want to define myself as a value investor, growth investor, or momentum investor, because I found that what was value investment yesterday can become a junk tomorrow. And what a value investment yesterday can become a growth stock tomorrow, and then a momentum stock day after, and then become a market craze on the next day. Okay, so all kind of things happen. So I want to align myself to what the market is telling me, and then decide that how to align the portfolio.
Got it. So now moving further into this as to
Yeah. You probe me as much as, because I think is that I may not be able to come out clearly at times, possibly because my mind does not work in a very simple way. I know that. So articulation sometimes becomes a little difficult.
no problem, no problem. I try my best to
Yeah. You
bring
can
out
do that.
everything. So my further follow up to this would be, so now, for example, you must be having a process as to how do you start looking for ideas, and then out of them, say you come up with say 100 companies, how do you reject ideas, and how they further come to your process of buying, whether you may buy a few of them in your portfolio. So we start with that, that part of your process first. How do you select stocks?
Okay, so selection process is it takes a little longish answer, so bear with me, because I start very much with a macro, because the thing is that I first want to see that what the macro is telling. Because I am not a person who believes that macro has no meaning and nobody has been able to make meaning out of macro. If you cannot make meaning and tell the world that you cannot make a meaning, then it is your problem rather than anybody else's. Okay, so point is that when the interest rate is zero, kind of PU assigned to the market is something different than interest rate at 6%, the PU assigned is different. So if you don't understand it, then you don't understand it. Okay, point is that, and second is that inflation was down because the China was actually dumping the world with cheap products. Now, when you are onshoring your products and you are trying to make sure that you try to do it in your own country, the inflation will be high structurally. Okay, so and then with China is against you, that means you are not importing inflation to your country from other countries anymore. So you cannot go back to 0% interest rate and cannot go back to the low inflation regime anytime soon. So these are the things I want to understand. I don't want to understand what are the other things like whether GDP is growing by 5% or 5.5% or 5.75% or that kind of nonsensical stuff. But point is that I want to understand these basics where the world is headed and how every country is positioned, because ultimately geopolitics and macro may work in the market on a long cycle. So we may say that, okay, so I cannot make an investment decision out of this, but the thing is that you can make a basic overall idea about it. Because, and I don't know if you have seen it in my website, I have seen how macro actually devastates a country. Because as I was telling you, in 1998 when I was in Bangkok, I interacted with my first serious investor who made me understand Warren Buffett. That point of time, if you remember, my reason for going there was to buy companies which were available for cheap on behalf of Usha Martin, on behalf of L&T, or buying kind of small setups, engineering setups. Because overnight that country has gone bigger, basically, because the he halved. So that point of time has made me understand that US investors can say macro does not work for I bother, but for countries like us, we need to bother about it, right? So how it was shocking, because I have been to in 1997. I think first time I went to Bangkok for L&T, and 1998 when I went, and in the midst of that when I went, this question actually came to my mind, because and that time I had no idea about economics. I don't have an economics background, but that how what happened actually, what actually caused this kind of terrific and trouble the country is facing. Okay, so unless you have seen that, you have been there, you cannot really understand that what it was at that point of time. Similarly, in 2008, market shock did not come due to any kind of market reasons, right? But if you read Economist, or if you read Financial Times, if you read Wall Street Journal, you knew that over the period of time, the kind of bubble is being built. And this Greenspan spurt, I don't know whether you are aware of this term, which was used at that point of time. This Alan Greenspan used to tell that this low interest will remain forever and things like that. So point is that those kind of things actually affects the market. Now you cannot predict it, but at least you know that which way the wind is blowing, right? So and that part at least you can see. Second is that I look into the sectors, that which sectors which we look into, which will work. Like a simple thing, if you notice in the last few years, is that consumer economy is really struggling. But at the same time, infrastructure economy and that part is really going by government push. So the thing is, entire sectoral investment can be put towards your construction, machinery, electrical, transformer, these, that is something which is a trade you can decide based on the sectoral allocation. Again, that is coming from indirectly from macro numbers, right? The consumer economy is not doing well, government investment is highest, private investment is not picking up. So where all it can go, right? It is going to electricity, road making, these, that. So you are aligning in that way. So that is the thing. So in COVID time, it was a very different thing. Everything has fallen and everything has gone up. But post that, what has happened is that in last 2-3 years, if you see that chemical stocks did not work, if you see that Consumer stocks did not work. You see, the banking stock didn't work. So what was the area which was working? If you have aligned with just looking into the GDP growth composition, you can make out that where all you want to invest, right? Then coming to the companies and sectors and things like that, where all I think value, I think liquidity. I am not a small cap investor. I don't invest in micro cap and small cap stock. Small cap means anything less than 1,000 crore. I mean to say that. So I generally don't invest because we don't have the capacity to invest in those kind of companies. Because a 20 crore company, if suppose the company is 100 crore is market cap, how much I can invest? Right? I cannot invest 10% into a company which I don't know what. I'm not a venture capital or private equity investor, right? So, point is that so in that larger set of companies and those kind of opportunities I can discuss later. That those kind of micro cap I have invested when I invested during 2011, 12, 13, 14. I have invested, made some money also. But point is that later on I realized that that opportunity is going to come down with private equity coming in, with all other kind of venture capital coming in. Those kind of opportunities may be few and far between, and it is futile to go for that. So then comes this basic of looking into companies, looking into which are better, which are the best options, or buying a basket with small allocation here and there everywhere. So that is how we have decided to put it. So first is macro, then is sector, then into companies. Then the companies, you know that the standard structures are there. That I think you may be having more questions to come. So from that, so I'm stopping here.
Yeah, so my next question is related to companies only. So now when you come down to, I think you gave a very good framework where you start with the macro, then from macro you come down to sectors, and from sectors, whichever sectors you think that have some tailwinds at this current moment, you list down the companies. Now, when you have a bunch of companies which you are looking at, how do you then further, what is more important for you? The quality of business, the valuation, because maybe there would be some really good quality businesses in the sector which you like, but their valuation would be a little higher. Or there could be companies which the quality of business or the quality of management is not that great, but it is probably available at a very attractive valuation. Now, another question which is related to this, I want to bunch it together when I ask this, is that, see, company A, which is having a higher quality of management and higher quality of business, and company B, which is probably having a lower quality of business and lower quality of management as well. How do you value these two different companies? Because you can't say a 20p of a company B is better than a 25p of company A, because A is obviously better in terms of quality of business and quality of management. So how do you reconcile these differences? Because I think many of us, including myself and people who are watching it live and people who will watch the recording, have this same dilemma as to how much to pay up for quality and how low the price you need for a non-quality business or a stock.
Okay, so the question-wise, this is a full toss to me. To me, actually, this is very simple. Okay, because I will go for this 25p better quality business, and rather than going for a lower quality promoter, because if I cannot have a confidence on the promoter from the annual report, from the balance sheet, from the cash flow, then I think there is no point whether it is 5p versus 25p. There is no point in investing, right? So that part is very clear. Okay, I may earn little less on that particular thing, but I cannot really go back to somebody and say that I have bought this as a 5p. Knowing, I am saying the question you said that you have a question, you have already said that you knew that promoter is dicey, right? And knowingly promoter is dicey investing, and not knowing promoter is dicey is investing is two different things. So
Right.
knowing promoter is dicey and investing because it is 5p, I think to me is not done.
Yeah, that goes very well with your opening philosophy, which you said in investing philosophy. You are basically inclined towards making lesser and lesser mistakes. And when you buy a business where you cannot bet on the promoter, or where you cannot bet on the quality of business, probably your chances of making mistakes go up. And you want to reduce that. And that is why probably for you, the rejection criteria start from the quality of business and quality of promoter first, and then comes the valuation part. right?
Yeah, and if I can add one more point, Ankit, that when I see something is quoting at 5p and something is quoting at 25p, if that kind of a difference is there, first of all, it is very rare. But if that difference is there, I will first try to see why there is a difference.
Right.
That probing itself will give me a clue, right? And if after all these things I find that no, these are all wrong kind of ideas, or I can find that this is something I can come during a course of discussion, I can come to maybe a live example where I say that, okay, there one company was quoting at much lower vis-a-vis others. I actually didn't find anything wrong in that business. Okay, so I went to meet the management all the way to a not so common place in India to visit them. Okay, and then found there is nothing wrong, and I invested it. So that point of time, at least I have the moral conviction of telling others that, okay, I found that there is nothing wrong, so that is why I invested. So that part, that is a hardworking part is also involved there. So I will say that generally, if you say 5p versus 25p, you will find that from the annual reports and stuff like that, either their margins are lower compared to the other fellow, or their related party transaction, these that something, some or the other things are there which keeps market uncomfortable. Otherwise, you have to see that the market is not full, right? We may be fools, but market is not full collectively.
So again, a follow-up to this, does that mean that you generally tend to avoid turnaround opportunities? Because in turnaround companies, what happens is that for a long period of time, the business might not have been performing well because of whatever XYZ reasons. But there has been some trigger which has happened now, which gives you some indication that the turnaround is going to happen in the future. So there are different kinds of investors. Some investors would wait for the turnaround to happen and play out a little bit before jumping in. And then there are people who will say that now at this price, everything has been probably priced in. And there is this one event where maybe debt restructuring or management change or a mix of both. And you now think that now is the price you have to buy, because later on when the things start playing out, you might not get the same valuation. So what kind of investor you are? Would you like to wait for some more clarity, or would you go for price in that case?
No, I
Or
will
you
go for,
further you altogether not use the turnaround plays at all in your
it's all there is, again, there is no right or wrong question here, because I think I have made a lot of money in a turnaround phase of a company where a company was quoting at 1 rupees at some point of time. Okay, but that company was basically now I think is quoting at some 1400-1500 rupees. I don't remember because I left that long back. So, and that time I only knew that this company is IFB Industries. Okay, so I invested some time at it was quoting at some maybe what, some 30 rupees or something like that. So
Can you please repeat which company you're talking about?
IFB Industries.
Okay, got it, got it.
Okay,
Yeah.
so only thing, I that point of time I had no idea about this. It was in the year, I think, some uh, when I have also forgotten in which year I have invested there. But it was on an average, I think I bought it between 30 to 60 rupees. But I sold it long back. I sold it at about 700-800 rupees. But now I think it is 1400 or 1500 rupees currently. I don't even know. I don't track it anymore because I think that company, for some reason, I lost my mind from my radar. So, sorry, what was your question? Your question was that
My question was, do you wait for turnaround event to play out a little, or do you think better strategy would be to buy them early when the valuation comfort is there, but there is more uncertainty related to at what time or at what intensity the turnaround will play?
yeah, I will wait. But again, I think there are two aspects of it. Me as an individual investor and me as a public money manager or public money advisor. So me as an individual investor do a lot of things. Okay. So me as a public money manager will avoid these kind of things. And I will do only when I see a kind of a certainty. And now I think I am more aligned actually as an individual investor, and my public investments are almost the same. Uh, And I will align myself to see that these results are coming in. We have invested recently, actually, and recently invested, and not recently invested, we invested about 2 years back, recently exited, that is why I'm discussing, a company called Force Motor. Okay, so that company, I was having lots of positive and negative ideas about whether this company can turn around or not, what is happening. But when I started moving around and seeing all kind of travelers and all these things are all over the place, so then I started probing into it. I started understanding more. I visited that company and trying to get a little bit of idea, though this company is very, and this company had a lot of corporate governance issues, by the way. So the point is that, again, the last question was that whether it's poor quality, because this company was really at a discount compared to others. But in spite of that, the kind of management I have, sorry, the kind of, what should I call, infrastructure I have seen, the kind of people they are recruiting, the kind of information which I'm gathering from their suppliers, because you don't need to meet the management to know everything every time, right? The entire automobile space you can understand from their supplier basis. So that gave me some kind of comfort of yeah, but then it did not perform for a very long time. But the company, I found that is performing. So if you remember, I think we invested about 1,200 rupees or so, and then for next 1 year it remained almost the same price. Okay, and then suddenly it got fancy of everybody, and price have gone up by 6-7 times in last 1 year or so. So I, even in my investor note recently, I wrote that. So many people got in our advisory got frustrated that what has happened. This is not happening anything. And then some newbies are there in advisory who also gives us knowledge that we have learned this company is not good, this, that. So why did you invest? We have never, I thought, either you advise me and or you take my advice. I'm not saying I can be wrong. I can be wrong at any point of time. It is not that I am infallible. And we make a lot of mistakes, right? There is no point in. I think if I am 70% right and then 30% time I'm wrong, I'm making losing less money, then I'm fine. So now 60%, oh, हम 70% में लाया है, that's it. So that much is only my. So that kind of opportunities are there, but it is very difficult to tell. But yes, I will be late in investing rather than early in investing and trying to be more adventurous. If I am investing my personal money here and there, few shares, so that is a different issue altogether.
Yeah. So,
But if you are talking about turnaround on a cyclical basis, that is a very different story altogether, right? Even I don't think you mean that, right? You are
no,
telling about the
I didn't mean
ins.
that in particular, but you can talk about that as well. As
Oh,
in,
cyclical. We invest in cyclicals, local cyclicals, not global cycle. Global cyclical, we don't understand. We don't understand how steel prices move, how steel price, those kind of macro is beyond us, or how chini price, sugar price actually in short cycle moves around. We have no understanding. But point is that and whenever I invested in sugar, I made money. Okay, I lost money. So my losing money very consistently in sugar whenever I tried, but a small sum of money because and mostly in personal accounts. So I never invested for investors in sugar. But I always thought that next time I will understand, but that next time never arrived till now. It remains sour. So,
so you didn't participate in this ethanol story of sugar.
no. This part I find very dicey area. So I couldn't understand it. No, I didn't even invest in companies who are supplying machinery like Praj and all these things because, simply speaking, I have not been able to make myself fully convinced about the story.
Right. So I think again, I'll ask you to further explain what do you mean by global cyclicals? What do you mean by, because see, you have made a very just a single sentence of global cyclicals, and but I think many of our audience would want to go deeper into it. What do you mean by global? What do you mean by local? And give us some examples in terms of industries which you think are local cyclicals and global cyclicals. And then you can probably give past examples where it played out right and where it didn't play out right, so that we can have a very good example or set of ideas to learn from.
Global cyclical is very simple, where globally the prices are set, right? like say copper, like say steel or things like that. Okay, or say sugar prices. Sugar prices also depends on how much export is allowed, how much import is allowed, what is the price in Brazil, how much rain has happened in Brazil. Okay, so you have to track rainfall in Brazil to know how stock price in. Now with the ethanol story and all these things, people say that the cyclicality has gone down. Then I really don't know and don't fully buy into the story. And then it has to depend on what is the kind of state administered pricing mechanism decided by the state governments after this all these things. Then the kind of oil refineries. Okay, so there I think the global margin will depend on various things like crude price, either government how much money they want to make out of these companies, what kind of margin will be left in these companies. So I call themselves as a broad category of global cyclicals like steel, any kind of commodity, global commodity, any kind of stocks which are depending on the kind of very price variability depending on various factors. Now I call it to some extent bulk chemicals manufacturing is also a part of global commodity. What I call local cyclical is that those are the cycles through which the economy goes through, right? Like say last 14, 15 years, we had very bad investment phase in India, right? Sorry, till last 2021, 22, you can say. For last 13, 14 years, till 2022, we had a very bad phase of investment cycle in India. So the thing is that the real estate, the uh, transformers, the electrical gears, the uh, transmission line towers, the kind of machineries, pumps, all these kind of areas were having a very, very poor run. Now, when the government have started investing, because other parts of economy almost stalled, so government has no other option but to start investing. So at that point of time, that tide had started turning. Right. So these are all cyclical. So I don't think this cycle will last. Now, when this cycle starts, this cycle does not end in 1 year, 2 year, 3 year. It runs for 4, 5 years, then turns, then other cycle comes in. So that is the area I call the kind of local cycles, which are engineering, building materials, not building materials, sorry, engineering, building constructions, then pumps, transformers, transmission lines, road infra companies, and those kind of companies are, these are not cement companies. The biggest example is cement. I'm sorry, I forgot the basics basically. The cement, though we don't invest in cement company, but cement is a basic example, I think, because cement cannot be exported or imported, right? So unless you are in somewhere in Shillong or something like that. So so those kind of areas, and also mining companies, these are cyclical. So these cycles are mostly local cycles. Now, this is my broad definition. Okay, so if you start hair splitting, then I think you can continue money. We can do that, but I hope that your investors will get the drift of what I'm trying to tell.
No, no, that was very, very, very helpful. Uh, I think it would be even better if you can share a few examples from the
Okay.
past.
Okay. So recent times, actually, we have invested in some companies which have made good money, exited most. Those which have exited, I'm talking about. So we have invested in Elecon Engineering in some 200 rupees or so. Okay, so we have invested in Kirloskar Brothers. We have invested in seamless pipe company called Maharashtra Seamless. Though that is a company basically also where the corporate governance standard was improving. When we see that the corporate governance standard is improving, then I'm coming trying to connect the dots basically with your earlier question. So I hope your listeners or viewers won't mind that. So when the corporate governance standard changed, also the company started making better disclosures. Also, they have started investing and reducing their debts. We have started investing, and that company has given us a quick doubler basically over a period of time. So seamless pipes, then transmission. Some companies into these areas of all these related to construction and things like that, electricals and stuff like that. Uh, So, but we did not invest into small transformer companies because we didn't find any value. You may find my lot of posts on value picker on those companies on transformers and all those things made earlier time. I individually invested, but I never mustered courage because the thing is that I found this valuations are going out of the whack. And again, this is a cyclical business. So, and there is a structural shift comes in certain businesses, right? Say recently, defense sector, people are saying this is a structural shift. I don't know, but this kind of structural shift can also play for a very long time. So for my present examples, I think all these kind of many other examples I couldn't really often remember right now. We have made a lot of wherever we made some big money. I remember that because Elecon was one, Kirloskar Brothers was one, Maharashtra Seamless was one. These are we sold. There are other stocks which we own till now, so I don't want to discuss those. So and that's it.
So any examples where you got stuck in the cyclicals where maybe you were too early in the cycle or maybe you or bought the wrong company? Again, something from the
Not
past
in
where you
recent time, not in recent time past, but I quickly forget my mistakes basically. I forget the investment examples basically, right or wrong. Success, failure, both I forget. So many times it has happened, or many times it has happened is that I got frustrated. It actually happened later, but by the time I left, then the stock has really gone up substantially after my selling. Okay, so it has happened it has happened on many occasions. Or just because of valuation, I sold. Valuation means I found that valuation and P expansion, both side valuation has gone up. Valuation price have gone up because of the increase in their revenue and profitability, and also price have gone up because of the P expansion. And I find that P expansion beyond this is not sustainable. Then I sold. But point is that after that also P expansion kept happening and company started delivering results. So these things happen. So and yes, I think earlier time basically in previous cycle I never anticipated that this investment, this infrastructure related this drought which had faced for 13, 14 years. I never thought it to be so long. So in between, there was a phase where I had a belief that, okay, this infrastructure push will come, investment push will come. I have made a set of investments. Say after this new government came in, after the first, what is called the, what is the term? First election, right?
First term of
First term, after the first term. But that did not work out basically because after that the demonetization came, then this ILFS crisis came, then this GST has created a lot of dislocation. Then so nothing actually worked out. So point is that so I anticipated that, but it did not work out, and so you can say that that point of time I lost opportunity of the same kind of stocks. It is not the different set of stocks. Same set of stocks I tried, but it did not work. I left. Then I again re-entered, but this time it worked. So many a time people, I am saying it's obvious, but it is not that obvious. That point of time also, I thought that, okay, where from the next leg of growth will come, because ultimately the thing is that when we are talking today that consumer economy is not growing or things like that, point is that where from the next leg of growth will come, right? Unless we prepare for the next stage of growth. Next stage of growth preparation will require the kind of investments which we are doing in, say, infrastructure, road, port, these, that. So many things could have been done, but what has been done is there on the ground. So it needs for the next leg of growth to happen. So did I miss or did I answer your question completely? If not, remind me, grill me, and take dig out the answer.
Yeah. That is what I enjoy doing. That is what my
Yeah.
job is over here.
Yeah.
So my question to you is this now. Listening to your answer of this infrastructure and consumption, construction boom and all. So you said that during that period when the first term of the NDA government was going on, you thought that infrastructure will again play out, but it didn't play out. Now, of course, you would have realized that it is not working and maybe you would have cut your losses or you would have uh, exited stocks at break-even level, whatever it would be. Now, after COVID, when did you actually started becoming again confident that it will work? Because this is something very difficult to do as an investor, specifically for people who have not seen multiple cycles. You, of course, would have had the advantage of seeing multiple cycles, but what made you make that choice that no, again, this is the time we should look at these kind of businesses? Because we keep on hearing these kind of stories or news where we say that, in fact, you would have read that Akash Prakash recent article on Business Standard, where he mentioned that if fund managers are following the rules which work between the 2010 to 2020 period, they are going to underperform in a big way. We are into that 2003 to 2008 kind of a cycle. So either you transform yourself as an investor or you be prepared for underperformance. So I don't know whether you read that article or not, but
No,
I would like to have your views
no,
on
I didn't read
how
the
do you
article.
make that change
Yeah,
again. Yeah.
I didn't read the article. I try to find out, or if you can send me the link, because I am subscriber to everything, but I read very few things because simply the lack of time, and I have many other interests apart from investing. So that also takes a lot of my time. So anyway, so I think primarily I agree, because I think the answer I have given in the beginning for that, because I think if you, again, I'm trying to tie up the knots so that it can help your investors to understand. I said that interest rate is not going to go down to the level which was earlier, and I said inflation is not going to go down to the level. So I think that kind of model where the person is having asset will be much more advantageous today, because inflation actually will give the asset heavy businesses an edge, right? So the point is that a person who is having an asset will, I don't know whether Akash Prakash has talked in this line, but I feel that from this particular, I don't know in what context he said, right? Without context, I don't really like to comment on. But from my context, I can say that asset light model has become a fashion earlier, right? So because asset light model was the talk of the town. I think in future you will see that the asset heavy business will have a talk of the town. That will have an effect on P. Okay, obviously the return on capital employed and all those things will come down. And you don't need to look into road and port and things like that. You just look into the Google, Microsoft, Amazon, and Facebook's total investment committed for the next 2-3 years. Right. So mind-boggling investments they are talking about in the space of AI and server and data centers and things like that. If I remember correctly, I think they are going to invest almost $200 billion for next 2-3 years time. This is some gargantuan sum of money, right? And how did we know about Google and Microsoft and this company as an asset light business, right? So this gives you a clue about which way the world is going, right? So that part is very, very important. So yes, from that time onwards, we are going through few transition phases, and these transitions will be long. These transitions won't happen in a very, very linear fashion. These transitions will happen with lot of doubts, phases of doubt which will come in between, but the transition will be real. One is the energy transition, one is the environment related transition, one is that data center and AI related transitions. One is that your a kind of jobless growth that will be a kind of thing will be there, because the thing is that simply all said and done, it is very, very difficult to employ so many people around the world. Okay, if you see the kind of job loss which has happened in last year, actually, which is least discussed in India or elsewhere, that how much job loss has happened in US and in India in the IT and banking and all these sectors, right? So a kind of middle class which were created has been reduced by these numbers, but other than, and we have not been able to create an equal amount of jobs, right? US may talk about their unemployment rate is low and all, low for many decades. But point is that unemployment does not capture that particular data of what are the jobs you have taken out from the higher part of the society who actually make the consumption economy run. Okay, may not be applicable for US that much as it is applicable for India, because US has got many drivers of consumption. India does not have many high-paying jobs apart from in the areas of IT and banking. Right, so very few jobs are there. So in India, basically, though people are, the newspaper headline comes for this people buying some 10 crore rupees property, that 5 properties have been sold immediately in 5 days time. But point is that we never talk about absolute numbers, right? How many absolute numbers? 500,000? How many people we have? 140 crore, right? So we talk, actually Indian media talks more nonsense than sense. So I'm very blunt about it. Point is that, but the growth cannot be given for employment just because economy is growing. It is not possible, because the thing is that many kind of jobs will become redundant. Even if we try, even if we make in manufacturing as our goal, even manufacturing will create a fraction of a job than it would have created earlier, right? So these are the challenges which we have to face. These are the challenges which are irrespective of whether you believe in this ideology or that ideology, believe in that party or that this party. So these are all people discuss. I think most of the discussions I find absolutely fruitless. Okay, so the point is, there are certain things which anybody has to do if you have to run the economy, and there are certain things you cannot really solve whosoever runs the economy, right? So and there are certain inevitability which you have to follow, right? It's energy transition, EV, this kind of digitization and stuff like that.
Interesting. So now I'll ask you to, given that the backdrop which you have given in terms of how you see about the economy today. So can you list down a few sectors? I'm not asking for stock names here. Few sectors where, given the current valuation and given the current, say maybe the time of the cycle you are seeing those sectors in, which you think you are very positive on, and give us a few sectors, maybe 2, 3 sectors where you are extremely bearish, where you will probably avoid at the moment.
Okay, I am avoiding at the moment, not at the moment, for quite some time, the banking space. Banking space we are avoiding for a very, very long time, right? So we have started.
When was the last time? When was the last time you owned a bank in the portfolio?
Generally, our if you have read our this advisory portal, it is always written that we are actually very low on financials, because we find financials is the easiest and the toughest business at the same time, right, to understand and investing. So last time we invested in financial is quite some time back. I don't think I remember that. So I invested in a microfinance company, I think Future Micro or something like that. Then it gave a quick doubler or 70-80% return. Then I sold off. I must tell one thing. I am not a multi-bagger investor, right? I want to see as a multi-bagger portfolio return generator, right? So the thing is that you won't find that, oh, I am a 10-bagger, 5-bagger, 20-bagger. So utna nahi milega. I am comfortable generating a 3-year double or selling off quickly for 70-80% return, invest somewhere else. Because my ultimate objective, as I said in the beginning, that generating consistent return. So now the sectors where I am investing is also a function of the market direction, right? So I am a little cautious at this point of time because the market volatility has increased. Election result is coming in, though almost there is a 80-90% possibility that the same government will come back, but we don't know whether the government will. Then people are extrapolating the government will have same set of priorities. It may or may not be, because point is that one point I may digress, but point is that our debt level has gone up substantially. So our fiscal situation has to be consolidated. So now next government when comes to power may look for consolidating. But if the present setup comes to power, may look into consolidating their balance sheet rather than investing if they see that the other part of economy starts uh, firing in, right? There's no point in firing all cylinders when we can tighten your seatbelt. So I am not very confident about this defense sector stories, right? So that this will continue, and I don't know how long it will continue, right? And what up to what valuation. Yes, we are indigenizing it, and these companies have turned around. That part is there, but how much of upside is left in these companies, I am not very sure. Okay, I have no investment at this point of time in any of these companies. Neither I
But you
had it.
invested in the past.
Sorry.
In the past, you were invested in
We have
defense sector.
invested, but point is that we have invested in two companies. One is HAL and one is DL, but we sold it much earlier. We never have anticipated that this will change the valuation so substantially. And I am a little surprised at this change in valuation. And the point is that because you don't know whether the order book will be converted into a revenue in a very consistent pattern. Number one. Number two, you don't know whether the buyer, who is basically it is a monopsony, it is a single buyer, whether he will pay you in time. Okay, you don't even know whether you have capacity to all these things in a timely manner. So this kind of unpredictability is actually against the definitional increase in PE, right? PE increases when you see that your visibility is very long term. So I don't know whether the visibility may be there, but predictability is there or not. So I'm much earlier. I made a mistake maybe, but I sold it much earlier. So the sectors, and now looking into the market, I think that I am not really going with the trend. There are times when we invest with the trend, and sometimes we invest when the trend is flat, or I think the long downtrend has gone. It's kind of cyclical. Long downtrend has gone, and slowly the companies have started showing better results in their investments. So we have started investing into chemicals, pharma slowly. Okay, and we'll build up the positions because first, I don't see that the momentum may continue. And second is that these companies are showing incremental improvement in their quarter-on-quarter numbers. So these are the sectors where I am focusing on: chemical, pharma, some FMCG companies, not IT as such, except smaller IT companies. So IT will take much longer, I think.
So you talked about defense, and that was a very useful comment which you made. And kudos to your honesty. You shared what exactly happened with you. Generally, people come and boast about what did well and how they made multi-bagger returns. But that is good that you shared what you consider that you probably sold a little early.
Much early.
My question is, do you hold the same kind of view for railway as a sector as well?
Again, we don't have any railway stocks, but that is basically my personal prejudice. You can say that. My prejudice is because the thing is that one of the railway stocks, or two of the railway stocks which had gone up very much. I have attended. I was very interested about the railway. I attended few of their AGMs for over many years. When the stock was quoting at, one is quoting at 100 rupees and one is quoting at 30 rupees. One is quoting at 400 rupees now. The other is quoting at 1,000 rupees plus. Okay, but when their company was languishing between 8 to 100 rupees, I have attended the AGMs and regularly met the management over 3-4 years. Right. I used to go to Calcutta, meet their management. Both are Calcutta-based companies. So I used to go there, meet their management, try to talk to the ecosystem over there. Everybody has told that yaar ye sab bekar hai, wo kuch nahi. And also the thing is that the management does not elicit the kind of confidence in you that they can manage a global business, buying business in Italy, buying business here, there, Paris, France, and things like that. And I couldn't even make out actually head and tail and how this company will manage this kind of setup. Okay, and so I never invested. Same is for this another company in Kolkata, which suddenly became talk of the town. Many people have given us ideas when it was quoting as 20 rupees, 30 rupees, 40 rupees. Okay, so this company, I know you, the company which I'm talking about, right? One is Jupiter Wagon and another is Titagarh Wagon. So I never got any good kind of confidence to really build positions out there. I may have bought some stocks in very large portfolios. Okay, the portfolios which may be having values more than 50 crore. I am not saying large means that kind of size portfolios where I have invested some maybe some 40, 50 lakh worth of shares out there. So that is a different thing. But if you are saying I have invested, yes, I have invested. If I now many people have invested 10 shares and may say that I have made a multi-bagger. That is a different thing. I am not saying that. So I I have also invested and I can claim I have made multi-bagger, but it is not really like that because I made some pretense of investment, some 5,000 shares here, 2,000 shares there. ठीक है देखते हैं क्या करते हैं type. So now
No, no.
sitting
When I
today,
asked, yeah, yeah. Go ahead. Go ahead. Go ahead.
sorry, you can say sitting today. I will say that wait till election result comes. I think railway may be a very long-term story, but thing is that what is the harm? If you have not invested, don't sell. And if you have not invested, you are not bought yet, wait till election result comes. Wait till budget comes rather. I am not really more concerned about the budget than the election result, right? So because the budget can change the pivot of the present government also. Okay. And
Right.
so
Right.
you are extrapolating too many things. Politicians have a different set of perspectives because they have to manage different set of interest groups. And all interest groups does not mean that interest group is a wrong word. I am saying interest group in any wrong sense. I am saying that your priorities and priority of a 25-year-old Dalit in a village or a farmer is very, very different. So everybody is a voter and everybody, and that is the beauty of democracy, that it does not cater to one set of people.
Right. Right. So, in terms of
You were
the
saying
sector,
something, I interjected you, sorry. When I
no,
was
I
talking
think
about railway
no, I was
company.
talking. I was just saying that when I meant, "Are you invested?" I meant a reasonable allocation.
Yeah, yeah.
So you clarified that. So that's why I didn't ask that question again.
Okay.
So when coming down to the sectors which you like right now, you mentioned about chemicals, you mentioned about pharmaceutical. Uh, what about banks at this juncture? Specifically large banks. If you talk about, say, HDFC and Kotak, and when you look at, and I read in your on your website, you were once holding on to ICICI Bank and HDFC Bank for a long time, and you made good money out of that. I think in the 2000 period, 2000 to
No,
2010 period.
I think you are reading something wrong because I sold IDFC Bank, HDFC Bank at rupees 45. So that kind of great investor I am. So point is that so I invested it back again later, but that is much later. Initially, I think there was a Times Bank and IDFC Bank merger, a HDFC Bank merger. That time 1:1 ratio shares came. Okay.
Mhm.
So I got the share, and when 10 rupee became 45 rupees, I sold off and thought that I made a big money. So leaving that aside, so there are a lot of funny moments will be there if you discuss with me on investments.
Sure, sure,
But
sure.
point is that no, I have not really. I don't. I think you are mistaking something else because I don't think I have made a big money in HDFC.
But I think ICICI Bank was one of your holdings in
At some
that
point of time,
period.
yes, very long time I had holding for bank,
No,
ICICI
but
Bank.
my question is basically this, that when you look at the valuation of, say, an HDFC Bank or Kotak Bank today, and I'm assuming you don't hold the stocks right now because you said you don't
No, no,
have
no,
any
I don't hold
banks
anything, and
exposure.
I recently in television also I told that if I have to give an option of buying, and if I am forced with the gunpoint that I have to put some, then I will buy some PSU rather than private sector banks. Because I feel that the
Okay.
PSU balance sheets have been improved, number one, and number two is that technology is a differentiator, non-differentiator now. So why there is a public sector, private sector differentiation? Because we earlier used to think that there is this kind of banking, that kind of banking, that to a large extent has been got rid of, and how much we talk about it, sometimes is a little bit of exaggeration was also there, because project financing actually is not a bank's job, because banks are simply not trained to do project finance. Nowhere in the world banks fund steel plant, cement plant, or this kind of long gestation plants, and the asset liability mismatch which creates this kind of funding is something extraordinary, right? So point is that, I think the banks were wrongly. It is nobody's fault. It was because we had no other vehicle. Okay, so, or if it is a fault, it is a political fault, I should say, rather than bankers' fault. Right. So State Bank does not work or become some dhila dhala. That is a different issue altogether. Okay, that does not determine the bank's valuation. So bank valuation determines much more on the asset quality of the things they own. So I think that the earlier mistakes of really doing asset liability mismatch financing and doing this project financing is not going to come back anytime soon into the banking sector. Okay, and the bond market, if really improves, then that will give a cushion to the banking sector for really doing right what they can do. What they are supposed to do, they are supposed to do working capital financing, they are supposed to do bridge financing, and those kind of things. They are not supposed to fund a steel plant or fund a power plant, right? And those are not going to come back again. So now why I not look into a State Bank of India or a Bank of Baroda or a Canada Bank or things like that?
Got it. And so now that is one part. The other part
I
is
have not
there are so
invested
many,
anywhere. Yeah.
yeah. No, I got I got the answer very clear. Now my next question to you is, there are so many new age financial companies. I'm not talking only about Paytm kind of a company, but I'm talking about many. So like even when you look at something like as big as Bajaj Finance, it is no more just a physical banking or a financing structure, but they are also doing a lot of online based, app-based transactions which they are doing, and their focus is shifting towards that. And then there are so many small microfinance banks or small finance banks and microfinance institutions which are leveraging technology to a great extent. So don't you think this is a space which needs attention, and or why you are not looking at that space right now?
I think there are too many players, right? Everybody cannot make money. It is like telecom 20 years back. Okay, so
Okay.
the thing is that I am not invested, and also the thing is I don't understand it. Frankly speaking, these new kind of technology areas, how they will add value, who will survive, because survival also needs a lot of money. Okay, so those kind of areas I am unsure about. I am not invested, but I am invested in some kind of this platform companies earlier, like India Mart, then later on companies like Policy Bazaar. Uh, I invested in some very select portfolios, uh, Zomato at some 30, 40, 50 rupees, but I sold off actually. Again, we sold early. So point is that, so those areas I understand, but fintech really I don't understand. But at one thing I can tell you is that fintech may not be a particular company wise, but as a particular stack, but as a particular business idea, this will be really helpful for the extending credit. Okay, which company will survive, which company will do best, I don't know. But as a whole, like say payment system, Paytm may have gone out, but point is that GPay or whatever else has really changed the landscape, right? So ATM was a
Right.
like a unfortunate victim of the particular thing. It is same like Big Bazaar. So Mr. Biani
Right.
was a Mr. Kishore Biani was a visionary. Look, unfortunately, that vision was too much of debt clubbed with the vision has really caused his
Right.
downfall. But I think the same thing. Somebody else have now Trent and they are doing wonders in this market. But this entire market was started by him, right? So the thing is that that first visionary will make all the money. It is no guarantee.
Right. My one last question related to the finance sector, then we'll move to the other sectors. So you said that too many players are there in this sector, and that's why you are, and you don't understand which one will play out and how. I'll come to a very niche sector in this finance, which is affordable housing finance. And there are only few listed players. Okay. I think a handful, 3 to 5 players are there who are only focusing on, if you count the recent IPOs, then maybe 6 or 7 players in this sector. And
This
there
Aptus type of
also,
things you're talking
what,
about?
yeah, Aptas, Avas, Home First.
Oh,
Okay, and then there are recent small IPOs also in this sector. There have been new companies as well. My point is that when you attend to their con calls and read their annual reports, another thing, common theme which is driving in most of these companies is that their extensive use of technology and reducing the turnaround time to give the loan to their borrowers, right? So that is one. And also using technology in terms of sourcing also. Like Home First is using technology in terms of, I'm not just as a disclaimer, I don't hold Home First shares. I'm just giving you an example. Don't you think, and these are all secured lending. It is not like microfinance where you don't know which one will blow out and all. But when you see last 10 years history of these companies, there has been very less slippages. Of course, you may argue that some of the loan books are not as seasoned as you would like to be. But what is your general view on this particular niche sector in finance?
no, this is good sector. I have no question about it. But the thing is that this sector is so much owned by all the large players that I think ownership pattern of this share, this kind of stocks makes me little uncomfortable, because I find that whenever the opportunity of price growth will be minimal when there is over-owned sector, because every fund house, large funds holding large chunk of stocks. So whenever the opportunity comes, they will start selling it, right? So I really don't know that whether it is right to invest there. That is one side. I liquidity part of it is something which I look into it. But that is it. That is the part that was not the answer you were looking from me. You were looking from the valuation part of it. Yeah, I think that loan books maturity and things like that is not primary out here, because the thing is that the segment where they are putting money, unless that person actually completely dies or loses his job and completely gets into some kind of force majeure situation, Indian people generally repay their loans. It is so point is that, so that part I'm not really concerned about. Their sourcing structure and all these things will really leave certain kind of pin code, certain kind of area, certain kind of income generating streams which they find that maybe not right to invest in, they leave aside. So business wise, I have nothing to say. But what is the price to book they sell is something which I am not really comfortable with, and the ownership pattern of the stocks is not something which I am comfortable with, because all these P players and all these things, they are already into the stock, and which I find that, and if you find their return profile, they have not generated return. Right. So the thing is that this, I am hearing this story the last year, previous to last year. By the time the bull market has gone, stock market has itself generated return, but these stocks did not generate that much return. Though I am not actively tracking. Am I right in my observation, Ankit?
Yeah. So you're absolutely right. Valuation in terms of price to book is higher than what you will see in other financial companies. Number two, there are PE investors who have a large chunk of holding. Number three, if you look at 2 years back, their valuation was even more higher than what it is today. So right
Yeah.
now, if you compare from last 2 years valuation, it may look cheap.
Exactly. So
Uh,
the thing is that, but the thing is that
but
price appreciation did you get? Ultimately, as I
no,
said,
no.
my
Last two
my
years, there has been
ultimate objective is to get a price appreciation. So
and last 2 years, there has been no price appreciation. If you
absolutely. So
look
the
at
point is that then I will see that again, when whether it comes back to the mean level, I will look into it. Okay. So, and if I want to see some P investors out. So that is also very important for me. So the thing is, I don't want that overhang, with on my stock, that somebody will someday come and dunk it. I already own a stock where I am suffering this, right? So I owned a realty stock. I know that a large investor owns a large chunk of stocks, and which he is continuously selling. So so many factors actually affects this kind of investment decisions, Ankit. So in one there are kind of one kind of answers to it. Yeah.
No, no, that was very helpful. So one last question related to sectors. So
Yeah.
one sector which I think you didn't mention, I just wanted to have your views on that. So one sector which complete the whole sector where we have lots of companies, I think 5, 6 companies are there in the listed space, is QSR, which is seeing a lot of, if you look at the quarterly performance, not just in Q4, but also in Q3 and Q2, the performance have been very, very, very average. Maybe average is an understatement. And the share price has also gone down a lot compared to what it was, say, 2 years back. What is your view on that sector as a whole?
My view of the sector basically is that the consumption sector is not really performing well. So people don't have that kind of who will go to the QSR restaurants, right? For having these are takeaway or sitting, right? So those kind of, first of all, they are having kind of raw material pressure. They cannot increase the prices, because they increase the prices, then customers may turn away from them, or they will go for cheaper options. Their ability to increase the price, the pricing is so transparent that their ability to increase the price is very tough. And the competition is too high, right? So if you go to a barbecue nation, they do all kind of song and dance for you, right? Point is that ultimately that does not mean you will go back to them second time, right? So, but the kind of service, the kind of things they give for 1100-1200 rupees is something which is phenomenal. If you go to US, and if you ask that kind of service, they will throw out up to the restaurant. Okay, and specifically in India, where we don't, I think the 20% tips are unheard of, right? People give after eating of 1,000 rupees, they give to 20 rupees tips. So unfortunately, that is reality of India. So point is that, so that kind of setups, but that is a separate issue altogether. But I think too much of competition, too little pricing power, raw material is a trouble. These are the issues which are keeping them down. But as a business, they are good when the consumption economy picks up. If I see a distinct revival of consumption economy, I will start investing in QSR companies if the valuation has really come down. I'm not saying about the P level and all. I am showing from the chart level that if it comes to a rock bottom level, from the chart, I will invest. Okay, so point is that I don't know how to value this company, but at least I can take help of a chart to invest there. So I take all kind of help. We do all sorts of things, right? So to make sure that we were trying to minimize the mistake again.
Good that you introduced charts here, because my next question was only in that direction, where how much help do you take of technicals, and how much is, and you have to explain it in a little bit more detail as to how it shapes your investing process. When does it comes into the whole process?
It comes very late. Actually, I am exposed to even technicals very late in my life. Okay, but I picked up very much over a period of time, and I would say that I should take name here. To give credit to where it is due. I think one guy is Abhishek Basumalik, and other person is Shalin Shah. I don't know if you know any of them. So both of them actually have helped me in understanding and probing me into getting into this area at a very late age of my life. Okay. So, but then I quickly learned. I'm still a fast learner, at least. My brain has not really deteriorated that much. So, I use it in 2, 3 ways, basically. One is that in a trending market, I try to see that how the stock is performing. Sorry, how the market is performing vis-a-vis the stock. And in a kind of market where I am uncertain, or I know that fundamentally these things are real, I need to see that how much down it is from, say, 200-week average or 200 days average, this kind of moving averages and things like that. If you ask me my knowledge, if you ask me two details about technicals, I will be a person who will not even pass, right? So I can say that from the chart, I can at least try to understand what is the kind of momentum is there, whether what kind of volume actions are happening out there, whether those kind of people are accumulating the stock or distributing the stock. I try to understand that. If the stock is too much down and I find sector is improving, then I go ahead and invest. If I find that the sector is trending up, stock is also started trending up, I start investing more. So my allocation sometimes decided by technical a bit. I try to time to a large extent by seeing if the market is trending, to a large extent by seeing that, okay, the stock has broken those 200-day barriers, so 200-day moving average barrier, convincingly, at least 10% up from that or something like that. So these are the very fundamental ways. So I don't spend more than, say, if I suppose I'm investing in a stock, say I say 98% of the time in fundamental, understanding business model, promoter, forensic, then 2 to 3% time I invest in just before hitting the putting the trigger, plugging the shooting the revolver. I look into the chart. Okay, whether I can be a little bit more correct, something like that.
Yeah, so I got a good view as to what you do while buying. Do you also look at technicals while selling? So maybe in some of your
yeah, I am trying to. I am
stocks.
trying to improve. I am
Am I
trying to.
audible? Can you hear me?
Yeah, I think yes. In selling also, I am trying to be
Can
disciplined.
anyone on the chat box, can anyone explain if you can hear me, or
I can hear you.
I just don't know whether I'm audible or not.
I can hear you. Can you hear me? Hello. Can you hear me,
Yes, sir.
Ankit? Can
Yeah,
you
yeah,
hear me?
yeah. Yeah.
Yeah, while selling also, I think I am improving my process of selling. As I said earlier, I used to sell when I find that P expansion also to a level where I feel that it is sufficient and stock has also given return. I used to sell. Nowadays, I am trying to incorporate, not nowadays, I think for last 2 3 years, I am trying to incorporate more and more discipline into selling and trying to ride the trend as much as possible. But I start selling early even now because I want all my investors to get exit. Okay, rather than actually I am trying to sell at a top and then found that the investors did not get the opportunity to exit. Okay, because many a time it can happen in mid caps kind of stocks also. Okay, because stocks fall very quickly, because nowadays what happens is that, like as it said, now stocks goes up by stairs and comes down by elevator. So point is that that to protect investors from that kind of a situation, I try to see that I use the trend. The trend means that at least I used to see that I don't want to sell unless it comprehensively breaks a 20-week average or things like that. In a steady market, in a very up moving market, maybe 20-day average or 40-day average, I try to sell. So those kind of things, but it is not. It is one of the factors. It is not the only factor, or it is not the key factor, I should say. It is one of the parameters which we use. But I want to make a very distinct separation. I don't know if you have taken understood. I have been able to drive home the point. What is the structure of the overall market? If the market is going up, a one way to interpret the technical chart, the market is in a consolidation phase or going down, another way of interpreting the chart. That is how I look into it.
No, that was very helpful. So when you say that you are very focused on getting your investors and exit as well, and I remember at the start of our discussion, you mentioned that you held on to Sun Pharma for 15, 16 years. So I would now be more interested in hearing that story, as to you were saying at that time that maybe you will share more details about that
No,
story,
that's
how
here
Sun
again. That is a
Pharma was
funny
there in
story.
your portfolio.
No, that is a story.
Yeah,
It is a story of more of fun rather than of
yeah, please.
investment knowledge. Basically, when I was trying to sell everything in 2008, I have not been able to understand what is happening except my losing money every day. That time I was unable to sell it because because this stock was not dematerialized. Okay, so it was in a paper form, and for some reason it came back. Okay, it was not getting dematerialized even after my trying and trying. And by that time, my trial ended. When trying ended, that stock market again in the up phase. Okay, so the thing is that it was a victory not owned by me, but my luck actually kept me holding the stock for 16 years. Had it been there in a dematerialized form, possibly it would have gone in 2008, because I sold many stocks in 2008, and that was a terrible time, and that actually etched in my memory so hard that I always tell investors that when you say that somebody is having 27 years experience or this and that, that may be a liability. It is not only an asset. Okay, because I have got many memories which others may not be having, and that may help in writing this EV and all these kind of stories. Can claim that I have made 100 bagger in investing in Olectra or something like that. Okay, I cannot because here my experience is a liability.
Right. So I remember having the same kind of discussion with Mr. Gaurav Sood. You must be knowing him.
Yeah, I know very
He's
well.
also Delhi based. And so he was saying that he has been investing in options in a very
I know.
systematic manner since post-COVID, post 2008 period, right? And he said that because I have that experience and I've seen all the risk which may play out, my portfolio is always hedged. I always, whenever I do a option trading, I'll always hedge my trades. But all the new people who have started trading in options just after COVID time, they are having extremely high returns compared to what I am having in my book. But they don't realize what is the mistake or what is the risk which will play out eventually. Right.
I think I had an extensive discussion with Gaurav, and Gaurav was a person who was still unable to make me understand option, and those like Shalin and Abhishek has been able to make me understand technical. Gaurav or Siddharth has not been able to make me understand that options as yet. Okay, point is that if I don't understand, I stay out. Okay, or I sell. Okay, I don't try to hedge. And first of all, nowadays I find hedging becoming very costly. Okay, at least in this now, presently when I'm trying to look for hedging, the hedging instruments have become so costly, the puts have become so costly that I find it is worth selling rather than hedging the portfolio and trying to do too many things. So yeah, I don't have any zero knowledge about futures and options. Okay, so I'm completely a wrong person. Only thing in my personal portfolio or in my family portfolio, I do sometimes is that if I want to buy a stock, instead of buying that stock, I may be buying in the future. So that's it. So that is
Got it.
all only in personal portfolios or family portfolios. So
So I just wanted to mention that both Gaurav and Abhishek Basu Malik, they both have been on our investing Karwa sessions long back, and
oh,
I've
I
learned a
see.
lot from them as well.
Yeah,
I'll
Abhishek
probably
actually
share
most
with you
probably
the
read all the books available in investment. I don't know about his investment performance, but his investment reading is fantastic.
right, right,
Yeah.
right.
I have read maybe fraction of a book of Abhishek. So
Yeah, and it is not just about books. He reads very widely in terms of so many industries, so many other things which are
oh no
happening
no
on the
no.
globe.
Wide
So
reading.
that is
I
also
read much wider than him. So that is a different thing. So wide reading to me means reading about related to literature, to psychology, to spirituality, to which Abhishek has no interest in. So but that's got nothing to do with investment. I did lot. I being a Bengali, I did a lot of poetry. So
so let us make a digression. So from investing. So I'm not talking about investing books because we have already talked about the investing books which you read early in your career. But what are the non-investing books which you really like and which you would like to share? Of two, three, four, your all-time favorite books which you would
oh, I
recommend.
think
Forget.
this is a very tough question to answer, because the thing is that I am a voracious reader, and if you come to my home in Delhi or in Kolkata or anywhere, other places. So you will find that the kind of books I am having, the kind of library I'm having is huge, right? And also now, since my wife has completely debarred buying, except Bangla boi, because Bengali books are not that much available in Kindle. Except Bengali, I think the books, Kindle, physical copies of the books are not really allowed in any of the homes. So, and your question is, and since I am reading long time for a various kind of subjects, it is very difficult for me to tell what are the 4 or 5 books. I can only tell what all 4 or 5 of the books have really influenced me at different parts of life, right? And that's got nothing to do with investments. Okay, so like Tagore has influenced me substantially. How to become a human, okay, or how to what is humanity means, and how to live a life well. Okay, so if you say that the person who has really influenced me, and I think being a Bengali, my only advantage is unashamedly is that I have been able to read Tagore untranslated. Okay, so that has got a very major effect in my life. I have got a very major effect of the book Crime and Punishment of Fyodor Dostoevsky. Okay, I have very major effect of various books of Thomas Mann. Okay, Magic Mountain and all other books. So I will go more into literature. So that may not be of interest to this audience. Okay, so because I think the literature takes the crux of all human experiences and then fictionalize it and expresses it in a very different way. And poetry is something which even human cannot express properly. It's being expressed in some language where the idea is left to the reader or to the thinker about how to interpret it. So if you talk about books, I think I will utter many books and which may not be of interest to this audience. Okay, but not an investment book. So I don't think investment books come very late. I think to be very blunt, I think I would say one thing. Don't take it otherwise. With all due respect to everybody, I think. One person has told me, one physicist, because I have basically read physics, right, in my life for past 5 years. So, and somebody said it is a kind of a pursuit which we try to intellectualize, which is not that intellectual pursuit. Okay, we all think we are intellectuals because we are good investors. I think this is not an intellectual pursuit. There are many things which works on an immediate basis, right? Many intellectual means what? These work for 100 years. What shadow they live on for the future? How long is the shadow of theirs in the future? What is the shadow of an individual in the future determines his effect on the society. And that is called a real intellectual. So I think a Tagore, a Balzac, or a Japal Sartre, or a Mahatma Gandhi, they are the persons who left that shadows on this world. So my views on these are, I am in a very non-intellectual pursuit. So and this entire good books, I think Sapiens is a good book which I think people should read. Uh, on investments and all, I keep reading books, but I flip through rather than reading. And I really dislike intellectualizing it too much because I think that these are hollow intellectualization which happens. I think I read annual report, read transcripts, read results, read sector report, industry report. You can become a good investor. You don't need to really read 1,001 investment books to become an investor. And that debate we always have in a friendly way with Abhishek, always, wherever we meet. And we meet rarely, maybe once or twice, once in 2 years or something like that, but we always have this discussion. Anyway.
Yeah, so that was very refreshing take on books and reading. So I understand that since you have read, you are a voracious reader and you have read so many investing related books. So and I get your point, and I also completely agree with that point that it is far better to read more annual reports, more con-call transcripts, more industry reports rather than reading books over and over again. But someone who is just starting his career, if you have to just advise him or her to read 2, 3 investing related books, what would be those?
assuming the person can read annual report and can understand balance sheet and financial statement, right? If a person says that I don't understand annual report, balance sheet, or financial statement, I would ask them to first read, understand that. Okay, because unless a balance sheet starts telling you a story, it is very difficult for you to become an investor. This is a hard fact of life. Okay. So the point is that if you say that I only understand technical, I don't understand it. So assuming that the person understands and the balance sheet, cash flow statement, and he can understand auditor report, he knows the basic accounting principles, how a company's profit can be manipulated, to those kind of things. If a person knows, then comes the part of the reading books, right? So that part, I would say that this One Up on Wall Street is the first book. Second book would be Pat Dorsey's. I have forgotten the name of the book. I don't know. Five Principles or something like that. I could not often remember that name of the book. Can you
Five
remember it?
Principles of Investing.
Five Principles.
Five Principles of Investing.
Okay. Then I think Michael Barbosa's book, More Than You Know. Okay. Then these are offhand I am telling, and if you I can send it maybe later on. And then thinking fast and slow for your, that is a very important book, I think, for anybody to read. At least read the gist of the book. Okay, the book maybe at times many people have said that find it very boring to read and tough, but that kind of boredom is essential basically to master a skill of something which is very new, which is being told. And then you should read Charlie Munger's Pure Charlie's Almanac. And then many speeches which Charlie Munger has given. Okay, so I read him as the person who has really shaped my thought patterns on worldly wisdoms, basically. They both these persons, Charlie Munger and Warren Buffett's worldly wisdoms, are some working hypothesis on which people, there is nothing, no, some profound truth is mentioned therein, which sometimes people try to project, but some more profound truths are given inside literature. But as a working principle, I think those are very fine working principles to go with. So these are 4 or 5 books I can remember offhand. But since I don't even know when I read last a investment book, so for me, another book, I have forgotten the name of the writer, An Intuitive Investor. It is not a very common book, but really helped me a lot, basically, because ultimately I have realized that I am more an intuitive investor and then master my intuitions by practice. Okay, so in that book, I think you need to search out from the net. Are you there?
Yeah, I'm there.
Yeah.
Can you hear me? Okay. So, I think we have had a good elaborate discussion on books, both investing and non-investing. So there are a few audience questions. I'll go to them. But before that, I wanted to listen to one of your past stories, which is not related to investing again. So as I said during the intro, that you have been in, you were the first CEO of Dakshina Foundation, right?
Yeah.
So tell us a little bit about how you landed up in Dakshina. How was the experience there? And what made you leave that and join something else?
Okay, so I actually, as I told you, that I came back after from Singapore after selling the first company, first portion of the company which was based out of Philippines, because we were actually developing IT infrastructure for the telecom sector. Because that time, if you remember, data and IT, because that time, if you remember, there was not an uniform license. The data and voice was separated. I don't know, many of your new listeners may not be knowing that earlier the data service and voice service was separated in the license. Then the uniform license came, uniform mobility license or something like that. And that was applicable across the world. So at that point of time, we were doing these businesses and then sold it to the operator. So when the first business was sold, I came back and I was interested in of actually not going back and doing the second part of the transaction, because I knew that anyway I will get my share of the deal. So now, are you there? Can I?
Yeah. Go ahead.
Okay. So then I think Mr. Monish reached me actually, or I think he has seen me some profile somewhere, so reached me, or I have met. I exactly now don't remember how we actually came across each other. Uh, uh, and then the opportunity of this Dakshana came up, and I said, okay, I'll take that, because somebody has to do it, right? It cannot be done sitting in US. So I went to Irvine, and that time he used to be there. I don't have any contact with him for last many years. So that time we went there and decided on a plan. I have been able to implement those plans basically because of I had certain kind of ways and yeah, with the government, because my wife was in government, so she actually helped me in getting access to some people in trying to align ourselves with the Kendriya, what is called this Kendriya Vidyalayas, not Kendriya Vidyalayas, the Jawahar Navodaya Vidyalayas, and set up centers. So that time we started it very big across India, 9 centers and one residential center in Faridabad with 200 students. So I scaled it up within 1 year. One point actually, Dakshana started before that. It is not that I came and started Dakshana. Dakshana started before that. It was limping, and then it really started moving actually when I started giving shit. Then we recruited a lot of faculties and then outsourced a lot of things. So it started very big initially that we will support needy students and things like that who are in need. But later on, actually, what happened is that the crisis of 2008 happened, and that actually possibly hit Monish much later date. So he's substantially reduced the funding, and he said that he cannot fund it. Number one, and also is the thing is that he wanted a kind of result out of these, which was not achievable. So he actually changed the model. He changed the model of only taking people who are of background where the cutting requirements are much lower. Okay, and then he started showing that good results because of that not taking basically by default these people the people from the other categories are poorer, but does not mean that they are the only neediest people or they were the most deserving candidates who are basically looking for the opportunity. But point is that we later on I realized that the one thing is that the funding was crunched, and it was and the philosophy has shifted from really helping needy, but helping needy as well as those who can show immediate results. But the point is that those guys would have shown the result irrespective, because the thing is that those are the best students anyway. Okay, so best students among those category anyway, so they would have without intervention also got in.
Right.
So that I always had this that I need to prove that the intervention is effective when, not by result, by that intervention has really pushed that guy 5 steps ahead, right? So the thing is that within say somewhere it is cutting mark is 100, cutoff mark is 100, somewhere the cutoff mark is 20. So now a person can have already there who is the cutoff mark of 20. Now if I take him and make a marketing out of it, so those kind of ideological issues basically has also really developed a kind of a difference. So I'm not having anything against anybody's philosophy, because ultimately it is one's money, how one spent it, it's its own prerogative. But my philosophy of getting into the Akshana was very different than what it is. So,
Right. Thank you so much for honestly sharing your views here, even though it is not related to investing, but it was very
yeah.
useful.
I am generally associated with many few other NGOs also, but point is that is very tertiary effect, because I believe that 99% NGOs are really questionable. Okay, so I am only financially invested in some NGO where I know very well, or maybe organizations like Ramakrishna Mission or things like that, where I know that they do these things. So they will not do something which is not above board. They won't make themselves rich basically by taking people's money. Or these won't be used as a marketing vehicle for doing something else. Okay.
So Avikda, when we interacted over the phone, you said that 1 hour is good enough, but I think we have already covered 2 hours.
Oh, what is the time now? Okay. What is
So we have already covered 2 hours, and I do have a lot of more questions, but I see a couple of questions on the chat box. So I'll leave it here in terms of my own questions. and I'll move to the questions which are there on the chat box.
Yeah, but before that, can I say that what would be the hard stop time? Can I
Yeah,
ask?
that would be great. Yeah.
What is the hard stop time?
I don't have any hard stop. You let me know if you have any hard stop.
Let us make it 12:30.
Sure.
Okay.
12:30.
Or
It's
earlier.
already 1. It's already 1 p.m.
Oh, sorry. Oh, sorry, 1 p.m. So 1:30?
Yeah, sure.
Oh, yeah.
So
30 minutes is good enough time, actually. If I cannot
yeah,
answer, you can assume I don't know the answer. So,
Sure. So one question is by Mr. Krishnan. He's asking that how do you, so there are so many companies which will come into your initial watch list based on your research, which are based on your work. And then out of those 100, how do you actually boil down to say 10, 15, 20 or 30 stocks which you are finally having in your portfolio? What is that step? How do you arrive at that step?
okay, we actually go through the quarterly reports, quarterly results very minutely. Okay. So point is that if a new company is there, it comes from the quarterly result. If suppose some extraordinary result has come in, if it falls in our criteria that promoters are not really bad or promoters are okay, company stock has got liquidity. So those kind of things, if we already knew or if we can know quickly, then we really focus on the results. And now Katsi, our friend Ayush and Pratyush, now, and analyzing these results is not some kind of rocket science like it was earlier, say even 6-7 years back. Right. Earlier, I think when I started investing, starting 50 companies itself would have taken entire time rather than today 5,000 companies can be done in same amount of time. Right. So point is because of the phenomenal work done by those two brothers. So point is that we see from those results that what are the things which are interesting. It is a very everybody does the same thing. I think we don't do something which is a very secret sauce. And then if I say that the sector is right, we find the company's result is a, then we watch the result. We may invest some and then watch the result. If we find that the next quarter result is also good, stock may have gone up 20, 30, 40%. Okay, then we invest more. If we are confident in the beginning itself that this sector, I am confident that this will do well. So that is how we generate a kind of an idea. Idea generation is not a problem today. I think idea execution is the biggest problem because I think there are too much of idea, too little time to read, and too much of information about the company rather than what 20 years back was there, that there was no information and we were struggling for information, trying to meet company management here, there. Uh, some companies meeting, some companies not meeting, some company is telling utter lies, some company is over projecting. So point is that, so that may be a question you may be having subsequently, I don't know. But the point is that, yeah, basically from the result, we segregate. And if we find that even the result is extremely poor, that also is a thing of study. Because if I find it is temporary, then we start actually looking into it very closely. Because we knew that the company was good or going to do well. Yeah.
So somebody asked this question. You spoke about Force Motors, you bought and then you sold after it ran up. So he said that he's asking why Force Motors over other firms in EV auto? Some other firms have performed well too. What is the process by which you arrived at Force Motors to begin with?
Well, I have seen that physical facility. So that itself is a differentiator. Okay, so the point is that I have also invested in a company where substantially less facility that has generated much more return in the recent time. Okay, but those kind of companies are there. But when I see a company which is manufacturing things for BMW and Mercedes, and who is having the things I can see around, right? Many EV companies, the things you cannot see around, but you invest. Right? Somebody has given a picture. Oh, I have seen this EV is running in this Bombay Road, or somebody says this is in Noida. I have seen a bus, but I see this traveler all around. I see all these new ambulances are made up of Force Motors. So where should I invest?
Right. So his next question, I think you are not comfortable to answer. I'll just shared to him that he's asking about what are the interesting firms in your current portfolio, but I'm sure you don't want to discuss your current portfolio, the stocks which you will be holding on in your current portfolio. So
Okay, I can say some because those are in the hold range. Okay, we are not suggesting any new buy. If you are don't buy now, okay, because these are already gone up, at least doubled from their or at least gone up 70-80% of their investment. So those kind of stocks I can share. Obviously, I won't share the stocks which we have recently purchased. So and we sometimes hold stock for quite some long time. Okay, so one of the stocks we have purchased long back is Markson Pharma. Because we are still holding it. The stock has doubled plus, I think. Another stock is Wellspun Corp, which we Indo what is called Indocount Industries. Okay, so those we are holding. These are already doubled or more than doubled from their lows. So those are not suggestion to buy. No discussion is having anything to do with any buy or sell recommendations. I am a SEBI registered advisor. Do your own due diligence. So don't hold us responsible for our mistakes or your mistakes. So unless you are a paid subscriber, you don't trust responsible. So and so that's it. Anything else?
his follow-up question is, can we have a repeat conversation between you both in 6 months?
Sorry?
He's asking, can we have a repeat conversation between you and me again in the next 6 months? Maybe he would want to check the stock's performance, which you have mentioned right now.
No, my stock is already doubled. So the point is that if I say after 6 months that it has doubled, it will still double, right? So the point is that. So this is a very funny question because stocks may also fall. Okay, so
I was just saying all this on a lighter note. He didn't mean
I am also talking in a lighter note. I am saying that if anybody tries to judge any investor, new or old, in 6 months' time, then something is wrong in evaluation. But yes, coming back to the main issue, it is always pleasure to have a discussion. But I didn't know that I can talk for 2 hours. So it's a,
you can give a little credit to me. I can make people talk.
All credit to you, because I think people will be surprised to see that I have talked at a stretch for 2 hours. So
and you will be even surprised. I didn't have any questions ready. I just read. I watched your interviews. I had things in my mind, and I just kept asking questions naturally, which came into my mind. I have no questions ready. I'm not reading from this thing, but I have few things which I noted down from your earlier talks, which I am going to refer to now. So now I'm actually looking at a few of things which you have already said in the past. So I think you had a very, I think in 2014 or 15, you did a conference in Singapore, and the transcript of that is available on your website. So I was going through that leading up to this discussion today. And I really like this point where you mentioned that analysis doesn't mean boiling the ocean, but pick up 4 to 5 key things. I would really love if you can just expand on that point, because I also personally feel a lot related to that point.
Yeah, it is a very dear point to me, and it's with my value picker friends, I will always have this kind of a debate. So I think the boiling the ocean is a kind of thing I sometimes find some people. I am not talking about any particular people, but I think that knowing 99% versus knowing 100%, there is a kind of effort versus kind of return is not worth it. Okay. And anyway, I'm not going to, if I find that a company is going to consolidate for 2 years, I don't have the patience to hold it. I will invest after 2 years again, rather than holding for the consolidation period and put my money somewhere else. And if I am 70% time right, as I am claiming, okay, so I am only claiming, you cannot prove, I cannot disprove me. So the point is that only thing, our audited reports are available for last 8 years. So that's the only thing which we have. Okay, so point is that, so coming to this, knowing 100% versus knowing 99% is enough for me. Okay, I need to know very few key things about this company, whether the promoters are honest, number 1. 2, whether the sector has got tailwinds. Number 3 is the valuation is reasonable, or from the growth perspective, it looks reasonable. Like say, if I buy a 100 PE stock, it is not valuable. It is not very costly if the company can grow 50% year on year, right? At least I am sure that it can grow 50% year on year for next even 3 years. Okay, or at least they have got a large plant that is coming to be commissioned or things like that, or they are having a kind of opportunity which is coming up in India which can really leapfrog their growth. So that kind of area I can pay that kind of evaluation. So if the valuation is right, if I don't find any kind of major ghapla in forensic accounting, in cash flows, or it is not the company who is buying profit from the market, selling, buying losses, buying profit. You know these terms, right? Profit kharidna, loss kharidna. So many people don't even know. So being in Calcutta and having a lot of friends within this business cycle, I know these terms from the days before I starting investment, right? Point is that if I can be reasonably sure that company is not doing those kind of stuff, then I am fine with an investment. And at the same time, I am not a concentrated investor. I don't invest 20%, 30% of my portfolio into any stock. So I invest at the most 5% in a portfolio. And at the slightest doubt, I don't wait. I am the first lever of that company if I start doubting their management. Okay, because and I find there the first, some trader has said that first loss is the best loss. You cannot make second loss cannot be better. First loss is always the best loss. And it saves your mental stress, it saves you money, and it saves you time to search for newer ideas. So I don't really go beyond that in trying to understand a company. But yes, I have got a reasonable grasp on what the company is doing, planning to do, and why I am confident, at least at this point of time, in holding the stock. And that is good enough for me. Then knowing that these companies, this customer had this kind of problems at that year. So whether if that recurs, then this kind of things can happen. So then there is no end to it, right? So I can go on and on and on. So it is never ending process.
Right. And that reminds me of a very famous quote or dialogue in stock market. If you have to panic, panic early rather than panicking late.
Yeah. First loss is the best loss. I think somebody has told me, and somebody has even told me, one investor in New York. I'd forgotten his name. He's American. He has told me that every day everything is for sale for me. But he's a long-term value investor, right? But he says that in my mind, we were discussing, he said, every day everything is for sale for me. If I find anything is wrong, I will sell. Okay, so
this is something which I find it very, very, very difficult to do on a practical basis. But I think I get your point. It is always better to sell early and then again think over it with a fresh mind. And if you think that whatever doubts you had no more exist anymore, so you can again make a fresh entry. What is the problem in that?
I want to be only one point. I am sure that I don't want to be forced out of the market by compulsion. Right. So that I am very, very. So like now, at now today, I am 25% plus cash. Not because I am very unsure about anything. Only thing because is that I should not be forced out of the market. Right. Okay, I may earn less. Okay, maybe I will be losing 5% increase, but for me it is a hedge. Okay, so that way I look into it. I don't want to get into a situation where I am forced out of the market because either I don't have money or I don't have kind of situations which force me to sell. I don't want to be a forced seller.
Like what I'm just clarifying, just for the benefit of everyone. You mean that if you are 100% invested at this time and say market cracks by 20-30%, you might have to force sell a few of your existing securities because you find something more attractive at that time.
I don't want to do that. I want to be ready today. That if something falls, then I can buy it.
Exactly. That is why you are holding cash because you think that you need that cushion if something like that happens. Like stock which which is there in your watch list and it comes to an attractive level, you should be able to buy with this cash rather than booking loss in some other stocks and then buying it, right?
Exactly, it becomes a zero-sum game, right? Like, and many a time people say that, okay, it falls, buy more. If it falls further, buy more. अरे भाई इतना पैसा कहाँ है? So it is that उतना पैसा होने से तो it is something very very stupid to me actually, right?
Exactly.
So you should be ready with that money. Nobody
Yeah.
is having infinite amount of cash. I have found people say that, okay, if it is there, buy more. अरे buy more, भाई पैसा ही नहीं है, पैसा खत्म कर दो,
No.
more कैसे करे?
So at this point, I'll ask you the question which Akhilesh asked on the chat. You mentioned when the stock keeps on going, you cannot keep on adding again and again because you have limited money. That is a fair point. But what happens when you buy a stock at a reasonable or a very attractive valuation and stock starts moving up and you know that the stock can do even better? So is there any process or any filter in your place where when do you start averaging up and when do you stop averaging up?
So I average up if I find that part averaging up is based on valuation. Okay. If the valuation, if I find there is no P expansion, only the stock is increasing because there ultimately how a multi-bagger is created. We all know that, right? I'm not repeating that. A good addressable market where return on equity invested capital is more incremental invested capital is same or more than existing in return on investment of capital, and you can do it for many years, you can generate multi-bagger. Like it is a definition of multi-bagger stock. There is, I don't think any other definition has been there of multi-bagger. Okay, confident multi-bag, consistent multi-bagger, not magic. So point is that, and in this kind of situation, if I find that, okay, stock is growing up because of the growth, but the valuation multiple has not really started going out of has really compressed or really remaining same, I may increase the allocation. But the allocation is, if I invested say 20%, then 20%, then last allocation maybe 2-3% or maybe 5% or something like that. But I don't keep increasing if I find that already the P expansion has started taking place, then I will stop.
Sure. So till the time you have only the earnings growth playing out, you will keep on adding till the time it is within your allocation rule. As in, say, if you want to put it, say 5% allocation in a particular company, you will not go beyond 5, but maybe you start with 1 or 2% and you keep on adding till the time the P expansion starts.
No, we invest minimum 3%. Lower than 3%, we don't do unless it is a very small cap kind of a stock. It is 2,000 crore below market cap, then we may add maybe 1% or so, or maybe 0.5%, something like that. But if it is a large cap stocks or big size, mid-size stock, then we invest 3% on an average. So another 2% maybe increase.
Yeah. So now coming to the cash portion, which you mentioned that you are right now in about 25% cash. So in your whole career, or maybe specifically in the career when you started managing other people's money, so maybe after 2015 or 16, when you're doing that, what has been the range, the lowest cash? What has been the lowest cash? Did you also take leverage, or what has been the highest cash, and at what times?
Leverage for investors, I never taken.
For your own personal?
Personal, I had taken earlier.
So when at what times did you take for your personal investing leverage?
2005.
Okay.
And then in 2014, when, but that is again not more than 20% leverage. Okay.
Did you take leverage during COVID times as well?
COVID time, no. That time I have stopped taking leverage. So I think the leverage history is gone. So I'm no more interested in.
But in terms of cash allocation, what has
cash allocation? Yeah, cash allocation during COVID time. What happened is that in COVID time, our portfolio was down. If you see our audited report, because that is only on invested capital, you will see we have a very poor performance. But the portfolio performance level, it was not that poor because we were actually sitting in almost 50% cash. But we sold on that cash at that point of time when market was already down by 10-15%. So you can say that 100 rupees stock we sold at about 80 rupees, which has gone down to 60 rupees. So we were not the first person to sell, but we sold it. It fallen further. we bought it back or we bought something else. But we were almost 50% cash by the time it came the 30th March period when it reached the rock bottom. And that rock bottom day, I still remember that I think I have suggested few advisories buying certain stocks. Or he said that if the world goes to world closes down, when the world goes to the dogs, then everybody will die. So the point is that even if you invest, nothing will happen, right? So the thing is that whether you have money in the bank or money in the stock doesn't make any difference. You will anyway die. Or if you leave, then the point is that it is a good time that to invest this money. Same I will do in a war kind of a situation, right? Say in a war kind of situation, something happens, then I will say that, okay, if we die, it is fine, right? So every story is over. But if not, then it is a good time to invest.
Got it. Got it. That war thing reminds me of something which I read in that Philip Fisher book. Never feel afraid of buying in a war kind of a situation. If you would have read that book, Common Stock, Uncommon Profits.
Oh, right. I read the book. I didn't remember this quote, but yes, maybe in the back of my mind. I think this is another book you can read. And another book I remember in this process is Expectation Investing by Carl Rappaport.
Yes,
I
yes.
think that book is a very good book to remember.
Right.
I forget those names, but yeah.
So somebody just posted on the chat box regarding your views on pre-IPOs and unlisted shares. Any experience or any recommendation there? Okay. So we have a third
I am
comment.
very, very afraid of illiquid stocks and shares.
Yeah.
I have bad experience of angel investing and little bit of investing in venture capital because all I think either I lost money or it has gone for a very long term holiday. I don't know. It is a dead money almost. When I will get back that money, I don't know. So my experience is not something very good. So
yeah. So I'll move on to the next question, which is there on the chat box. So I think this is a very good question asked by Aman. He asks, how will you overcome or how do you overcome or work on your prejudice because of past experience of business management, government policies, or maybe sometimes corporate governance as well?
So I told you it is very difficult to do, right? It is almost impossible because I know that I always knew that I should be 100 miles away from what government where government is involved, right? And even now I feel that very, very seriously. Okay, because if you see this now, this recent example, forget about old example. This same subsidy has been withdrawn, right? So point is that now anybody who has invested on FAME subsidy has gone to dogs. Right. So the thing is that it is very fashionable nowadays to talk about government companies, government change. These kind of things don't change just like that, right? So overnight, I think State Bank of India will start welcoming you is something which is impossible. So and the cultures don't change the way people. I have seen company running because many investors actually have no idea about the corporate world, so they have very little understanding of corporate culture, culture management, culture adjustment, change, managing multicultural environment. My experience, and also incidentally, I worked for different reasons or traveled across the world very, very extensively. Okay, so and to not to see the places, but to see the culture and people. So I don't think I can overcome the prejudices, but even in spite of those prejudices, if I am still generating return, I'm fine.
Yeah. So I'll take this last question from chat box, and then I have last couple of questions with which we'll end the session because
Yeah.
I think you mentioned 1:30 as the hard stop. So Kiran asks, what is your average holding period?
It is very difficult because nowadays average holding period is less than 1 year at time because the stock goes up by 5 times in a year. So what will you do? Okay, so average holding period, many people actually, even new investors ask us average holding period. My average holding period at times is 10 years. My average holding period for this kind of cyclical at times is 1 or 2 years at the most. Okay, because cyclical stock, if I know cyclical and holding because it is going up, I play up to a point, the trend. But beyond a point, as I said, I have to leave time for investors to also exit. So average holding period, you can on an average say it is 2 to 2.5 years. And by the time, even Warren Buffett's average holding period is that, right? So in spite of all the talks.
That again reminds me of a recent tweet of Ian Castle. I don't know whether you know Ian Castle or not. But
I don't know Ian Castle, but I know his name.
yeah, so he mentioned that most of the investors nowadays fight on or discuss on a Warren Buffett quote, which he no longer follows, or he doesn't follow that strictly. But this guy, just assuming it to be a Warren Buffett quote, follows it like a religious person. So these things are keep on happening. We get
It is like we evolve, right? As an investor, I read Warren Buffett quite extensively, right? If you see in 62, 63, 64, 65 period of Warren Buffett, he was basically trading. He was buying, selling. He had when he, if I had an insurance company to invest in, I would have also invested like him. But I don't have an insurance company. I have an investors, right? No investor will give me money if I say that I will sit on with cash for over the years with $143 billion of cash, right? And I don't have the structure of an insurance company. And now my regulator won't allow me to have a structure of an insurance company where I enjoy the free float and invest.
Right.
So point is that two persons in the world, I think, is most misquoted. One is widely misquoted, who is Karl Marx. Anybody, anything, any Marxist, and being a Bengali, I know the kind of 100 Marx quote. Most of the things are wrong. Marx never said that without that context. And second is this Buffett. And third, I think, is Tagore, because in our school life also, we used to quote Tagore and nobody used to check, because Tagore has written so much that nobody can check that what he actually written.
Yeah. So I'll come down to, so we have last 5-7 minutes. So I'll just ask you these two simple questions. Why do you think or we should do investing? And why one should invest in India or Indian stock market now? Just simple two questions. Your thoughts on this?
So I am extensively living in US at a large part of my time, but point is that I still only invest in one country, because knowing one country itself is enough. Okay, now if you want to say that I am a deep value investor or whatever investor, okay, you want to understand now how will you go to US every time to check, or even Yugoslavia or China or Japan to find out what the company is doing, right? And I can give you an interesting example, if time permits, about a company which I don't want to take name. They used to tell that they have got large offices in US and things like that. Anyway, okay, first let me answer this question, and then if you want, you can remind of this. So I think one country is enough to understand. It is impossible to know more than one country, and a country like India. Number two is that present geopolitics, present global situation, present Indian demographic advantage, these two are so fundamental, demographic advantage and geopolitical situation, that world almost, it is like I may sound a little bullish, but it may, like globe is conspiring to make us a little prosperous, right? So it will happen irrespective. Okay, it may happen 5 years, it may happen 7 years, it may happen 10 years. And if you see the past, all said and done, our economy has doubled every 5, 6, 8, 10 years since the 2009, since the time we got our economic independence in 1991, right? So if our economic independence started slowly coming in 1984 onwards, when the telecom policy, computer policy, and those things have started coming in, little bit of delicensing here and there. So 84 onwards it started. But the initial pain became so much that we had to take a big bang policy change in 1991. And since then, we have actually done phenomenally well. Maybe sometimes slow, sometimes fast. It is not that you can have a smooth selling every year. Like stock does not go in a linear fashion. Your economy also cannot go in a linear fashion. And you have to create space for growth, like company consolidates. So country also consolidates for some time. Right. So point is that, so if you take all these things into consideration, then you have patience for 10, 15 years, then I think India is giving you an opportunity which is good, unless we goof up ourselves. Goof up ourselves socially, politically, culturally. But there are various ways this country can goof up, but there are only fewer ways the country can basically a very, very diverse country like ours. Okay, many a time we underestimate our diversity. So
thank you. That was very, very, very helpful. So I think we still have 5 more minutes. I'll ask you another question.
Okay, you can, another 10. If you have questions, so there is no point in.
No, we'll stop at 1:30.
Yeah, if you have questions, you ask.
Yeah.
If you have another 5 minutes to take, but some meaningful question is left in the chat box, then you can always ask me. I'm
No,
okay with that.
we have exhausted the chat box questions. We have
Fine,
done
then it is fine.
Okay.
Yeah.
So your final advice to people who are watching your session live, or people who will probably look at the recording. What is your final advice to especially young investors who have very little experience about investing? What would be one or two main advice you would give?
Investor means what? Investor means two things. One is that investors who wants to invest into Indian market, and investors who want to become investors themselves. Whom are you asking about?
I'm talking about the retail individual investors.
Retail individual investors should actually invest, depending on the size of money they have. They either should invest in mutual fund. If they don't understand anything, they should invest in some good mutual fund of large caps, or invest in ETF. If they are having some good sum of money, then they should invest in some kind of PMS or AIF, or people like us who advise directly, make customized portfolios, give individualized service depending on them. It is not kind of, we are not trying to sell anything to anybody. So, but initial period, if you don't have that capital needed to invest, then you should start small with some help of small case or things like that. And if you are little larger, then invest in ETF and all. If you are having risk averse, don't want to take the chances, but invest. The point is that invest. It is not that you cannot really beat inflation without investing. It is impossible to beat inflation without investing, number one. And if the country grows at 6%, I always tell a simple thing. If the country goes at 6%, 5%, 4%, okay, so assume India is growing at 5% rate. Okay, if Indians are left alone, nobody messes around with us, we will grow 5%. Okay, we don't need government policy, nothing. Okay, lesser the better. So we will grow 5-6% rate anyway. Now add 5% inflation, then you get 10%, right? So 10% return you can generate by investing only. You cannot generate 10% tax-free return without investing. It may not come in 1 year. It may come over a period of time. Focus on India-based stories, because the thing is that in Indian index, what happens is Indian index does not capture India story. Indian index sometimes capture US growth, right? Because the thing is that we have got more IT companies who have got nothing to do with India, right? So if you just really focus it onto India growth and then invest, you can make 10% return. I am pretty sure. Not pretty sure, but I should say that I hope to be sure.
No, that's such a wonderful note to end with this session. Like invest, either invest in mutual fund, invest through advisor, invest through PMS, invest through AIF, or invest on your own, whatever you feel like, but do invest. Because if you are not investing, you are already doing a big mistake. And as we started the discussion, Aveek is a person who would love to do less and less of mistakes in investing. So the first mistake to avoid is not investing at all.
Yeah, that is a mistake. You can try to time them. You can invest more when the market is down, invest less when the market is, what is called, sorry, invest more when market is down, invest less when the market is up. This kind of adjustment you can do on your own, but otherwise invest. Otherwise you cannot generate return, because saving suppression is only way to generate cash for the government to invest, right? How government is investing, right? Because they are giving away return less than the inflation adjusted return. You again a macro concept, but point is that this macro idea is sometimes you think through, because I don't have time to explain it any further today. Think through that, because the saver suppression is one of the ways of government generating money to invest in it. Government does not have money in their pocket, right, to invest.
So I'll just summarize the main 2 points which I learned from you today in this session, this insightful session is, first of all is invest in way which you are comfortable with. And second is, while you are investing, try to minimize on the mistakes. If you minimize that, the upside will take care of itself, right? And have a reasonable expectation. As you said, that 10% is something which can be achieved by many people if they have that kind of expectation. And you need at least that, because if 5% is the growth and 5% is inflation, at least 10% is something which you need to your net worth to grow at, right? So thank you so much, Aveek, for your time. It was really wonderful. And thank you so much, audience, for listening to us in such
Somebody
a
still having a question, I think. So let us take that question.
Okay. I don't think there is any question.
Somebody raised the hand, I think. So
Let me just.
anyway, forget it.
Yeah. So,
Okay.
there are no hands being raised. Everybody is just writing how brilliant or insightful this session was.
So, is it?
Yeah. So thank you so much once again, Aveek, and thank you so much, everyone.
Thank you.
We'll
Bye.
put up the
Bye,
record.
everybody. Thanks.
Yeah, we'll put up the recording very soon and update you everyone on this. Thank you so much. Have a nice weekend.
Thank you.
Thank you.